and gentlemen, analysts and associates, welcome to your Managing Director Secretary's favorite podcast, the Big Swinging Decks Podcast by Litquidity and Moran. This is not financial advice. You'd be a bottom bucket analyst to make investment decisions based on what is discussed on this show.
Hello. With us today, we have Mark and Leslie Lamb from CoinFLEX. How are you guys doing?
We're doing great. How are you?
We're here in sunny Miami. It's fantastic. I can't complain.
Yeah.
It's amazing to be here.
What are we doing down here?
Well, we're setting up the offices and of CoinFLEX US.
Okay.
So CoinFLEX US is an exchange we're launching in a few weeks' time, and we're really excited about it. It's going to be really big for flexUSD, especially. That product is going to get, I think, a lot of exposure from CoinFLEX US, and that's kind of what we're focused on this year is just growing flexUSD with CoinFLEX in the US.
So this, it's safe to say, is the official expansion into the United States, right?
Exactly.
Awesome. And so what is your role? And then, Leslie, what's your role at CoinFLEX?
Yeah, so I'm the co-founder and CEO of CoinFLEX.
And I'm the Chief Marketing Officer of
Amazing.
CoinFLEX.
And for anyone listening, you're probably wondering who I am. I'm Mark Moran. And so, guys, I guess maybe you can explain why I'm here to start off.
So we actually found you guys through your Instagram, which is, I think, where most people find you guys, because Litquidity is a really well-known financial meme account, followed by
Industry leaders.
Industry leaders, exactly. And if you're based in the US, you probably flip through a bunch of their memes every single day, and you're actively looking, right, for the next post. And so we clearly knew that your audience is a very loyal one, right? It's hard enough as it is trying to build up a following, let alone getting that daily engagement.
Yep.
So your audience is what we were really interested in. But it started off as just, hey, it would be great to get some sponsored posts on your Instagram. We had seen a few crypto ones, and we thought, well, great, their audience aligns with ours, and let's see if they're interested in what we have to say. And basically, after a few emails, it just escalated into something so much bigger. You weren't in the picture yet.
Yep.
By the way, it was just Lit at that time. Lit, short for Litquidity.
Yep. Lit is the anonymous founder of the Litquidity page that started 5 years ago, and then I came on in September of this past year.
Yeah. So we met through email.
Right around then,
all good
right,
friends.
like back in September. It's great, and here we are.
And
you guys are sponsoring our podcast, Big Swinging Decks. So it's going to be a great process to kind of help to educate people on CoinFLEX US, the offering, and all that crypto is. And I think for us, one of the beauties of our following is that it's basically a majority of people from traditional finance who are not really aware of what is going on in the space that you guys are working in. And so we view this as an opportunity to really be able to grow together as companies, which we're super excited about. Something we can talk about a little bit further, but it's just fantastic to kind of be kicking this off and to have met you guys in person for the first time.
Yeah, it's really amazing with crypto. You have all these internet-based relationships, and then you finally meet in person. In some cases after months or even years of just lots of Zoom calls and texts and messages and stuff. So.
we are all IRL friends now.
Yeah,
exactly. In real life. It's fantastic. And so where are you guys coming from before you got to Miami?
Yeah, so we recently moved from Hong Kong to Dubai, which is just a fantastically crypto-friendly place. So, Dubai is kind of part of the UAE, and the UAE is doing a number of projects and initiatives to become more crypto-friendly. And I think that's what we see there. There's just a lot of positive momentum in the right direction in terms of crypto from a regulatory perspective and even just a government support perspective. So we're living in Dubai. It's kind of a great place to be in the middle of the world, time zone wise, and to be managing a business that's very Asian, and we have got a lot of people in Asia, and then also building out in the US here in Miami. So it's been a great place to be, and a very welcoming, crypto-friendly place to be as well.
It's truly going to be a global business, I think it's safe to say. And you guys had spent some time in Hong Kong previously as well.
Yeah. So we've lived for 3 years in Hong Kong. We met each other in LA
Okay.
over a decade ago, and I moved to London and spent about 7 years there, and then we moved to Hong Kong, and then now we're here in Miami and living in most of the time in Dubai, and it's
Crazy.
lots of traveling around the world. Yeah,
Lots of travel. And so tell us a little bit, about what happened yesterday, which is why we're here, and an individual we met at a certain unique location, huh?
Yeah, so that was really, really exciting, which we met with the mayor of Miami, so Mayor Suarez, and I went on his Cafecito podcast talk, and I think it's a very typical example of what you find here in Miami, which is just a way more welcoming and business welcoming, crypto welcoming city than a lot of the other major cities in the U.S. I think they're also, generally speaking, more proactive around COVID in terms of getting things back to work, back to business, back to things in motion. And that was kind of, both of those things were kind of very attractive to us when sort of selecting a city to be headquartered in the U.S. And so that was what we were announcing with Suarez. And I don't think we would have gotten that kind of a reception in most other major cities in the U.S. So pretty excited about that.
Yeah, and I think, the embrace that the city of Miami has done to the crypto community is something that will pay off very significantly in the future, and I think really makes it this hub for the industry.
Yeah, totally.
So in terms of why you guys are here, tell us a little bit about the offering that's coming to America, why the decision was made for it to happen now, and what the plans are.
Yeah, so we're excited to bring America's first interest-earning stablecoin called flexUSD, which you mentioned a little
That sounds
bit ago.
good. America's first. So there's no other interest-earning stablecoin.
Yeah, there aren't. So flexUSD is the first interest-earning stablecoin where you're getting paid interest on the blockchain every 8 hours.
Wow. So I am literally earning interest while I sleep.
Exactly. Every single 8 hours without fail.
Not that I'm getting 8 hours of sleep, but hey, I could be earning. That's pretty great, huh? And so I feel like there's something to that not many people are aware of this coming out to the market, because you think about inflation, you think about everything that's going on in the stock market right now. Why would I not throw money into this?
It's a very powerful tool, and we really think that the chance of CoinFLEX US, the mission of CoinFLEX US is like changing the nature of money in America, because if you think about money, it's a transactional tool. It's half of every transaction. We spend the vast majority of our lives trying to earn it, and then kind of the rest of our lives doing things that are effectively spending it. It is so crucial to every aspect of our existence, and people they think about their job, they think about this, they think about that. They often don't think about the kind of the product that underpins it all, the money product and money as a product. And money right now, it's expensive to send internationally. It's got these delays. Even within the US, there's kind of multi-day ACH delays. And with the blockchain, you remove all that. You remove all that friction. There are many blockchains that are feeless or very, very low fee. And so you have this kind of frictionless tool, and then in the form of stablecoins, which is kind of this genius innovation. And then on top of that, you have interest. We are seeing very low rates of interest all around the world in all sorts of products.
Even negative interest rates somewhere in Europe.
Even negative interest rates in Europe, and this is just a horrible situation for people. And so you've got low interest, high inflation, and utility of the actual money as a product is low as well, because of these delays and fees and stuff. And so what we're trying to do is really just create a better alternative to that, where there's less friction and you're earning real market-driven interest. This is not coming from some token that's printed out of thin air. This is not coming from some type of governance inflation model. This is literally coming from the futures markets and a form of collecting interest in futures markets that's been around in traditional finance for many decades, and high-frequency trading firms and large hedge funds have been able to capture these opportunities even before crypto. But the thing that's unique about crypto is it allows us to build these financial primitives on top of an open market. Once you have an open market, once you have a direct market access, you can build financial primitives on top that get tokenized into stablecoins, and then the end transformation is this kind of product that can be the best money that America's ever seen.
So taking a step back a little bit, I think a lot of people's hesitancy with crypto is that they think a lot of it's a scam. And so if I'm pretty crypto naive and I here's a stable coin that I'm earning interest on while I sleep every 8 hours, how does that happen? Can you explain to me the process of why you guys are able to have this offering?
Yeah, so it's very similar. Whenever you're getting interest, there's some sort of lending or risk-taking activity that's going on. And when you think about risk-taking or lending or any type of thing like that, you think, oh wow, what's the risk? How dangerous is this? And there's one type of for most consumers, they interact with loans in a few different ways in their lives. They interact with credit card debt, and then they interact with student loan debt, and then they interact with housing mortgages. And student loans and credit cards, obviously these are types of lending that really banks should be undertaking because they're very risky. You might not pay back, and then the bank has to deal with that and all sorts of things. But a house mortgage is a very interesting type of loan because it's very low risk. If you stop paying for the mortgage payments, if things are going south,
there's collateral to it.
There's collateral to it, and that collateral can be sold, so the bank can basically ensure that they're not going to lose any money. And what we're doing is very similar. So CoinFLEX is lending into the futures markets on CoinFLEX with flexUSD. Basically, it's a trade where futures traders want to be long crypto. They want to be levered long, and they're happy to post collateral on CoinFLEX, lock up their collateral on CoinFLEX in order for this privilege to be long crypto. And so they're putting up this collateral. It's more than the synthetic borrows that they're doing. And because they have this collateral on the exchange deposited with us, if the crypto market goes south in the same way someone might not make their mortgage payment, we can just liquidate their positions. And that is done to protect the exchange. It's done to protect all the customers of the exchange, including flexUSD as one such customer. And the powerful thing about that is that collateral can be liquidated 24/7, 365 in real time. And so in a way, it's even better than a house because if a bank has to sell a house to cover a loan and the housing market is not good, that might take several months.
Forever. You think about the homes in Florida and Arizona back in a global financial crisis.
Absolutely. And we are dealing in a true free market, and so we have to have these mechanisms to be able to liquidate immediately, and we do. And we've handled huge market movements, 20-30% moves in a day, very very sharp moves in 1 minute. And the beautiful thing about these crypto markets is they are open every single second. So you really are looking at 1 second to 1 second liquidity and liquidations and risk. And that is just, I would say, it's an order of magnitude safer than many of the types of lending that are done in traditional finance, where it's a once a day or once a month type of process, and it's a very slow process on the selling side.
It's interesting the way you describe that, because I think a lot of people, they hear leverage, they think horrible, bad, right, regulated. And you realize the necessity that is in all of these markets. And so I thought you did a great job explaining that. Also, just wanted to touch on, with crypto being 24/7, that's kind of why you guys have to have offices all throughout the world to be able to handle all these real-time movements.
Yeah, we have a global team, around the world already today. Even
how many employees overall?
So we're 70 employees right now. So 70 full time. And it is one of those things. Leverage it does get a bad rep, exactly as you said, and it's a double-edged sword. There are a lot of businesses, including crypto, that are not managing leverage correctly, or they're not, they're offering too much, or all sorts of things. And what we've seen is, hey, if you look at lending in the normal market, the non-crypto markets, it's the same double-edged sword. So in the absence of mortgages, the housing market would be a disaster, and only super rich people would be able to own homes, and all sorts of problems would happen. And so there's a lubrication that can emerge, and there's speeds up people's ability to do business, speeds up people's ability to transact, get on these these ladders of purchasing things and trade. And so leverage is really a powerful tool. And also the thing that's even more powerful is being able to be the provider, being able to be the bank or the house and take that edge. And what we're trying to give is like, look, high frequency trading firms, hedge funds, they've been able, and including banks as well, they've been able to earn the financing rates from a lot of these activities, whether it is housing, mortgage type activities or crypto financing activities, which where the rates are a lot more lucrative. And the normal average Joe on the street is not earning those from these opportunities, and we wanted to democratize that in a very, very safe way that could be audited and transparent and all that stuff. And that's
talk to me a little bit about the auditing process.
Yeah, so the auditing process is really interesting. We have an auditing firm that we're about to go live with, and so I won't say all the details, but it's going to be multiple times a day attestations to the balance sheet of flexUSD. And we think this is really interesting because as an interest-bearing stablecoin, people want to know that, okay, this interest is really nice, the payments are really high, but are my funds safe? And
exactly, right? Because if you think about for a stablecoin, like you think back to the issues with Tether, and that's kind of what people associate with a stablecoin. And so this is interesting to hear how it's different.
Yeah, it's very different because most of the other stablecoins only have monthly or even quarterly attestations.
Yeah, if that.
And if that, exactly, if they're even, if there's even any auditor or attestations being worked on at all. And with monthly and quarterly, in both of those cases, you can, I'm not accusing anyone of this, but you can hide things intra time stamping period, in between those two attestations, you can do certain things. And I don't know if that's happening. Who knows? That we'd have to be running those businesses to know. But the thing that's exciting about 3 times a day is there is no room to be dishonest. There is no room to be anything but fully transparent to the end customer. And we've even made the API keys where the actual lending is happening, where the actual futures perp collection, interest rate collection is happening public. So this is,
so that's very revolutionary.
I think we're by far already the most transparent stablecoin. If you ask some of the other stablecoins, okay, what commercial paper are you actually holding, or what are you actually, there's this line item, what does that actually mean? They might give you an answer, they might not. Who knows what they'll say? But if you want to know exactly what's happening with flexUSD, you just plug the API keys in and you find out. Or in a few weeks there's going to be this auditing firm, and you can literally see the whole thing. So
and that'll be on the website.
That'll be on the website, not
Amazing.
Our website, but that auditing firm's website. On their own website, you'll be able to go there and see. So we're really excited about that. And yeah,
that's fantastic. And I think, one of the huge differentiating things, and I think the way you guys are approaching this is a way that really builds trust. And what's interesting to me about you two is, so in getting to know you guys over the past few months, there's a little bit of an interesting background story for you guys that, you touched briefly on, saying you met a while ago and kind of moved around together. But I was wondering if you wanted to go a little bit more into this unique dynamic team that is running CoinFLEX.
Yeah, absolutely.
This is probably the first time you guys are actually talking about this, right?
I don't think we've talked about it yet. So.
In America, we love these stories. So, this is the place to do it for the rollout of CoinFLEX US.
There you go.
Yeah, absolutely. So, my name is Mark Lamb, and her name is Leslie Lamb, and
the Lambs.
It's because we're married, and so.
When did you guys get married?
June 3rd, 2018, yes.
Yeah.
But you guys have known each other much longer than that, obviously. I'm curious, when did you guys first start dating?
It was 11 years ago.
Crazy.
Yeah.
Crazy.
Yeah.
So 11 years.
High school sweethearts.
1 month. Yeah.
But we've known each other for even longer than that, though. So we both grew up in the same school system, and it works such that, you all go to different elementary schools, you all feed into one middle school, and then you grow up together and go to high school, and then you part ways oftentimes for college and university. So we've known each other from afar for a really long time, but didn't actually pull the trigger until much later.
I love it. And then when we were having dinner yesterday, you said something interesting, or maybe Leslie, it was you that Mark said to you that he would never hire you prior to when you were working other jobs. And look at how the tides have turned.
This just sounds like it's such a bad thing.
It's funny though.
It was we shouldn't work together.
Yeah,
we're married. But
yeah.
But there was always this question of whether we would, because a lot of people assume that the people there's a lot of guys in crypto, and they assume that I'm the one that has driven a lot of our mutual interest in this stuff. But actually, Leslie was writing papers about Bitcoin in 2013, and Bitcoin being used for remittances and payments, and kind of the potential for crypto being this alternative payment mechanism for people around the world. And so, I got into Bitcoin in 2012, which really meant we both got into Bitcoin in 2012, and Leslie was in Berlin and looking at the Kreuzberg area where all these people were, very, very early in actually accepting Bitcoin for, payments at their pubs and payments at their stores and stuff. So
the original use case.
Yeah, the original use case for all of crypto, payments.
The infamous pizza.
Yeah, the infamous pizza. Yeah.
And you actually know that guy, if I remember you saying correctly, right?
I know him very well. Yeah, specifically the guy who sold the pizzas.
Who sold the pizzas.
So he got the better end of the trade, I would say.
Yep.
And the other guy, the guy who bought the pizzas, Laszlo, he, very, very publicly, that's a well-known fact. And then I know the guy who got the Bitcoin.
Amazing. And so you guys you've been in the industry, essentially from close to the start, right? Yeah. And which is interesting because you have a lot of similarities in terms of your background to, say, an SBF at FTX, where you saw this arbitrage opportunity in Japan early on, started, taking advantage of that. It's kind of led you here. And so it's just interesting to me to see you two, because most, husband and wife teams, people don't work with their spouse, right? It's tough. It creates a lot of challenges, blah, blah, blah. But for you two, being involved in this industry for so long and really being able to kind of build off of each other, it's a great dynamic. But it's something that's really helped for me to kind of see and trust what you guys are building. And I think it's like, when you have a unique vision, there's not really many other people, if they don't see it, that you can work with, and you guys have it, and it's awesome. But that's one of my favorite things about you two and this company.
Well, I think it was very natural to do it, because also we're just so all in to the crypto space and the crypto world. Yeah. And obviously I was all into CoinFLEX, and at the end of the day, she was all into CoinFLEX as well, kind of we moved out to Hong Kong together because of it, and all sorts of things. And so really it just we were both all in, and it just made sense to be all in, on the business we have the most control over and influence over. And
absolutely.
And we believe, that there's also a difference, I think, in there's lots of different parts of the crypto industry, and I think they're not all the same level of interesting.
Yeah.
There's a lot of parts of the crypto industry that are kind of might have a potential to be very interesting, but there's different risks to them. There's different risks to gaming or NFTs or these different things. The part of the industry that I think has very low risk and really is probably going to touch every single human being in the entire world is stablecoins. It is, money is a product that everyone uses, even if they don't use the internet, they use money. And so it's the biggest product in the world. It's $70 trillion, close to $100 trillion now. And so that's kind of one thing where we're very excited to be involved in the stablecoin space, because we have without a doubt that it's going to be way bigger in a year, 2 years, 3 years, and 10 years. We've been in crypto for 9 years at this point, and we're going to be in crypto for another 9 years, and then another 9 years. And so it's for us, this is really something we're so passionate about, and we can't give up, and we love, and we're just devoted to it. And I think that's that's kind of why we're in this together as well as a business and as a couple.
Yeah, I love it. And Mark, you've talked a lot, so let's let Leslie talk a little bit now. We've heard enough from you, right? But Leslie, I think it's funny because your role is very unique here, because the whole idea of marketing in crypto is something that's new, right? Something that no one really has a foothold on, and you have everyone trying different strategies left and right. And so would love to hear a little bit about your whole thought thesis in this space.
Yeah, for sure. I mean, I'll even go back a little bit to our previous conversation because I think it has a lot to do with the role that you're in right now, which is having that owner-operator mentality.
Yep.
I think that's really what it comes down to. It's alignment of values, right? You can have the passion, you can have the interest, but ultimately you can't buy loyalty
Exactly.
from anyone. And unless you own what it is that you do, you're just never going to have this all-in, ride or die mentality. And I think that's very similar to the business that you're building out with Lit, right? It's the sense of no one really knows. Like now going back to this question is no one really knows what this sort of new age media is going to look like. You guys started out as a meme account. Maybe I can just dilute it to that, right?
Please. No, that's correct.
A meme account, thank you Facebook, thank you Instagram, right? Try to leverage these social media tools, but you're building that now into a platform. You're growing a community of people who are loyal to you. You're building products and then hopefully eventually services, right? That's what you're doing is literally no different from what we're doing. It's just the baseline product or service, is a little bit different.
And it's interesting too, though, to be partnering with you guys because I feel like we're both at similar stages of companies and we're kind of growing, obviously, in different fields, but we're growing kind of at it together. And so I think this sponsorship, this partnership that we're doing with our podcast, it couldn't be better than with you guys. And so it's going to be really exciting because for us, we see a lot of our mission is kind of the educational side of things, that we're able to go say things people won't say normally and do things people won't do normally in traditional finance. And so being able to have this kind of megaphone in the space, we're really looking forward to being able to kind of allow people to tell their stories. And for me, in kind of thinking about this and explaining you guys as a company, there's a lot of crypto companies, right? But there's really none that's like you guys. And I thought it was so interesting last night when we were talking that you guys had kind of been hesitant and struggled to figure out, how do we disclose our relationship to people in the beginning, right? And the fact that you're coming out now and doing this, I think is awesome because it generates so much more trust with people. Like to be able to put face, because crypto is oftentimes a faceless industry where you have a lot. I mean, the founder, Lit, he's anonymous. There's a lot of anonymous people out there in the world.
Yeah. It's trying to figure out how to engender trust in what's interesting, right, about crypto is a trustless ecosystem. It's supposed to be the case that you just verify, don't trust.
Yeah.
But when it comes to relationships, that's not how it works at the end of the day. Maybe the crypto infrastructure itself is operated in such a way that you don't have to trust. And that's why we're so excited about this, decentralized financial system. But ultimately, there are teams building these products, right?
And I think in terms of conversion for crypto naive people, you're going to need that trust to be built by having faces associated with things. And I think that, this is something that, if I'm hearing I can gain interest while I sleep, I'm like, I'm at least interested. And then it's a husband-wife team doing like, okay, there's a lot more to this than I thought.
So the beauty of this partnership with Litquidity is that we are putting faces to thoughts, ideas, services, products. This is the reason why we are so all in on media, right? You asked about what this crazy world of Web3 crypto marketing is about. We can sit here for an hour and try to run through all different types of examples. Sports obviously being a huge part of what crypto marketing has been about, and almost seems like a meme, like, oh, just another
stadium, right?
Yeah, another stadium, another team sponsorship, individual sponsorship. And I think all of those are really, really crucial elements that crypto marketing is starting to explore. And I love that. But I think it all kind of wraps up into a bigger picture here, which is everyone is trying to figure out a way to amplify the message.
Yep.
And I think the way that we actually do that in the most organic way possible is by sitting here, talking together, and really trying to grow a media platform that is for the people. I mean, it sounds a little bit like foo-foo, but it's really, the future of new age media is about, delivering value to an audience that feels like they want to participate and engage and then be a member of your community, right?
And I mean, it's fascinating for us on the Litquidity side where we're very much a proprietary news source because we have so much information coming to us from kind of boots on the ground, if you will. Not, and if you're a Bloomberg, Fox Business, CNBC, they don't have the same types of information that we're getting because we're a trusted source. We're not going to give anyone up, but we also don't really play by the normal rules of journalism. And I think a lot of this is there's always been these historic rules of traditional media, and it's so awesome to see you guys in this space not playing by those, because it's like you can hire a PR agency, you can do all these things, you can get ads placed in Forbes, Business Insider, whatever. But if you're not putting yourself out there, really telling the story to be able to get these followers, these people invested, then what is the point? It's not going to go anywhere.
Yeah, and I think at the end of the day, people want to know that they can trust the people in charge
Exactly.
of something. So we want to be super transparent. It's the same reason why we're doing this stuff with attestations and audits. It's not because we need to know that we're fine. We know we're fine.
Yeah.
We want the customers to know exactly what's going on. And
Exactly.
And we want to make that easy to understand. And in the same way, we want to make ourselves easy to understand. We want to be out there, day in, day out, in front of the camera and on the microphone, because we want people to understand, like, what are our lives like? What's going on?
Yeah.
Like what are we doing to build out CoinFLEX and for Flex coin holders as well? There's a huge community of people that are holding the token, and they want to figure out what's going on with the company. What are we building? What's coming next? And so I think whether you're someone who's kind of thinking about minting flexUSD, whether you're someone who's looking at using CoinFLEX.com, being able to kind of get a sense of exactly who are the people behind this business and this movement, and what does it mean to be kind of changing the nature of money in America? Like, that's something you need
to be doing.
Yeah.
And I mean, it's interesting because for me as kind of a creator, right? Putting yourself out there, you're really making this all or nothing decision of, I'm putting everything in. This is just what it is right now. There's no option for failure. And I think historically, business executives and leaders, they have not been content creators. But you guys see that in this new world of media, you have to be to develop trust, to get a following. And so it's funny because I feel like, oftentimes, Mark, maybe you're more reluctant than Leslie, you to be a content creator, but it's something you guys have realized there's a necessity for, and you're just jumping off in the deep end.
We need to do it. Yeah. Yeah, absolutely.
And it's like you struggle, it's tough because you have to be vulnerable, you have to be authentic, and like you're always constantly second guessing yourself and what you're saying and what you're doing, how you're looking. But it's something that I think people really need in this day and age to kind of understand not only who you are, but it helps to understand the product offering as well. And I think for this story to be told, for this product to work, it's something that people have to see it to believe it. Because if you just hear it, you're not going to believe it. You're going to think it's too good to be true. There's a scam associated with it.
Yeah. How are they paying interest that is way higher than what it can get in traditional finance?
And so one thing I realized I didn't touch on is what are the kind of the interest rates like that people are earning?
Yeah, so I think in the average of this week, it's been over 8%. And,
wow.
And I think the long-term average has been over 10%.
So higher than inflation.
Higher than inflation. Yeah, we're outperforming. Yeah. So and that's really important. When you think about inflation, it is something where the value of your currency is kind of being debased and losing value every day. And at the end of the day, there are a lot of people that can take the risk tolerance to go all in crypto or all in stonks or something like that, and maybe sometimes that'll way outperform the dollar, and it'll go up a lot, and that'll be great. And obviously we hold a lot of crypto. Like I've been investing in crypto for 9 years and continue to invest in crypto. And so like it's the vast majority of us, and I CoinFLEX believes in crypto, and we were all in on that stuff. But at the end of the day, like for a lot of people, if you only have a couple $1,000s, it might be a much higher priority to build up an insurance fund and kind of build up your own savings before you invest in something like that. And so we really wanted to get these types of folks, get the masses, the mass retail Americans, just able to hold stable coins that are earning them a yield. And at the end of the day, the result of that is you get some freedom from inflation. You get some extra dollars in your bank account, at the end of the month if you redeem. And what you're doing is really building up a mechanism for saving, because I think what a lot of people do, and I kind of noticed this as soon as I got into Bitcoin, is what a lot of people do is they see some extra money in their account. If they're living month to month, if they're kind of living paycheck to paycheck, they're spending what they
Yep.
they don't put away. And you even see this in big financial center cities. There's a lot of people on 100K, 200K, 300K, very, very high salaries considering the rest of the world. And they'll basically spend up to what they make in a year.
Yep.
And
There's a term for that. Henry's, high earning, not rich yet.
I did not know that. That's hilarious.
Yeah.
Oh man. So yeah, I mean, for those types of people, I think it's the same thing. There's something about, and I think there's something about inflation that causes that as well. When you know psychologically deep down, the dollar's gonna be worth less in a year, you're like, well, better spend it now.
Well, and I think that's something too that's come to light for younger people for the first time, where it's like, older people, they lived through the 70s and 80s with inflation. For us, we've never done that. Now you actually see it hitting, and you're like, man, my Chipotle burrito's $13. What?
Yeah. Yeah. So I think for that, you have to have something that's combating it. And the power of flexUSD is it's both a spending currency. We're going to be building out lots of use cases where you can just spend directly out of your flexUSD, maybe even on a Chipotle burrito. But certainly on other things. And so for that, it's a spending currency, but it's hyper liquid. You can redeem it into a bank account at any time. But it's also something where, there's this interest rate, and you can see where it's coming from, and you can see the payments rolling in every 3 times a day. And I think for people that can actually change behaviors, because I think rather than spending some enormous amount of money on something that they don't necessarily need, they're going to kind of put that money in.
Yeah, you're going to realize, okay, if I just don't touch this and I let it sit, then I'm going to slowly watch that, $200 turn into $214 and then continue to go and go. And I think that's super important, and is going to be, especially for younger people, a great entry point to get them in. One of my questions for you, though, is, so what happens if the U.S. creates a stablecoin, right? What does that affect anything? What are kind of the threats to what your offering is? Because if I'm listening to this, it sounds great. You guys seem great, but I still in the back of my head, where can this go wrong?
Yeah, so I think if you're a USDC or a Tether, I think you'd probably be very worried about the U.S. creating a stablecoin.
Yep.
Because at the end of the day, it's a credit risk thing, and if a stablecoin, which would really just be called a CBDC, central bank digital currency, was issued by the U.S., no one would use Tether or USDC, which both don't pay interest, if there's one issued directly by the U.S. government. And the question there would really be is it a private central bank currency? Is it something that can really be used in a limited way, like between banks and stuff for interbank settlements? Or is it actually something that exists on a blockchain and be used by consumers and customers and users of Ethereum and other blockchains, Smart BCH, around the world? And that's the question that I get really excited about, because if it is, then flexUSD can be minted with that central bank digital currency. And so we'll just plug right in, and that'll be great for us, because I think that's the sort of thing that makes stablecoins generally more likely to get accepted by banks as collateral, accepted by major financial institutions as collateral. So the thing that we get really excited about being here in the US is that obviously in every country, regulatory wins and changes are happening around crypto, and in some cases they're more negative for the industry, in some cases they're more positive for the industry. Obviously we've talked a little bit about what's going on in Dubai, and there's good things happening there. There's Bahamas is kind of trying to create this regulatory framework. But here in the US as well, very specifically for stable coins, there's a lot of positive wins where basically the Fed and the Treasury have said, look, stablecoins aren't the jurisdiction of the SEC. They're the jurisdiction of the Fed and the Treasury. And if we're going to implement a policy decision around them, it's going to be something that is going to come from Congress and the Senate. And that is a really transformative statement for the industry, because what that means is, first of all, it's not a security. Well, a lot of tokens have concerns around whether they're a security. A lot of the crypto industry has this kind of threat of being considered a security. So stablecoins, first of all, aren't a security. And then the second point is, like, they're going to actually require new laws to come in, which means a lot of debate, a lot of thoughtful time and effort by both sides of the aisle, and that's good. That's
well, thoughtful is not something you can always guarantee with politics.
No, you absolutely can't. But it means the decisions won't be made.
The discussion will have to happen.
It'll have to be a discussion rather than a 1 or 2 person or 5 people decision by a regulatory agency.
That you see with the SEC now.
Yeah, and I think the SEC probably have the best of intentions when it comes to crypto. But the outcome is kind of, there's not been a lot of successful SEC
because it's so new in these. I mean, we're still regulating traditional securities with rules from 1934 in the United States. It's nuts.
Yeah. So I think when you think about jurisdictions, when we think about jurisdictions, we look at competitiveness on a wide range of factors. How trusted is the jurisdiction? How trusted is the country? And obviously, U.S. scores really well there, right? Everyone trusts America. But the area that obviously we have to look at as well is like, is there a framework? Is there openness? Is there a hunger? Is there a motivation and an acceptance for this product or that product? To be somewhere. And with stablecoins and the US, there is here. And so we're very excited about that because I've been, we've been in crypto a decade, almost a decade. And we haven't seen that in a lot of places. We've seen lots of the typical response from a regulator is actually not, we hate crypto, we want to shut it down. It's actually, this is confusing or weird or looks like it could be money laundering, and we want to we want to ignore it.
Yeah.
And we won't give you the clarity as to whether this is illegal or not, whether this is regulated activity or not. And so that type of ambiguity is a real problem for entrepreneurs because you can't build a huge empire level business on non-solid footing, on quicksand. Yeah, you want to be building that type of thing on solid concrete, on solid ground, on a solid foundation. And so, that's something I think we totally have here, and then I'm really excited about that.
And that's why this educational process that you guys are going through, that we're helping with at Litquidity, is so important. Because if I'm a politician and I'm trying to learn more about this, I'm listening to this podcast, I'm listening to other podcasts with you guys speaking because I want to learn more about this. And I think that's something that's so great for you guys to be out here talking and putting your personal and professional stories out there, because I don't see that with anyone else, and that's something that gives me a very deep level of trust.
Yeah.
Well, kind of looking at your audience, Mark, like what questions do they have, right? A lot of them are in traditional finance. What are they coming to you with? Like, please just help us answer this list, and at least that will bring us a little bit over the line.
So for a lot of people, called the traditional follower of Litquidity is going to be a male, ages 24 to 34, working in New York, London, Miami, LA, with above average income, and they're invested in normal traditional financial products, right? Some of them may have exposure to crypto, but not many. And I think a lot of people see it initially as, okay, this is something, especially now you have teenagers making millions off NFTs in their bedroom. And it's like, okay, I'm slaving away my corporate job on Microsoft Excel for 18, 20 hours a day. And I'm pissed off that this kid is making money selling a virtual monkey, right? So screw crypto. But I think people want this kind of way to get into it that they feel like they can learn, that you can bite off a little bit, learn about that, and then go from there. I know, like for me, I got into Bitcoin, and then you slowly start to experiment with other ones, right? And I don't think people normally get into a stablecoin and then go from there. And I think for this, like Mark was talking about, you can kind of be able to watch this grow and grow in your account if you just let it sit. And that's going to be something that, to someone who is in traditional finance, they're going to be like, okay, there is something here to this, because this is much better than it sitting in my bank and getting a nominal interest, right? And so for us, I think what we see as the biggest questions is, so we talked about Tether a little bit, because when I hear stablecoin, that's what I'm going to initially think of, right? And say, okay, do they have the backing?
First and biggest.
Exactly, right? And I mean, for full transparency, at one point they were down to like 74% or something for, actual, like what was backing up their entire thing, right?
All accounts point to it. I mean, it's the sort of thing that I don't want to be too confirmatory.
Yeah.
I've never.
And I'm speaking from the ignorant perspective, right? But that's what the lay people would think.
Yeah, that is what the U.S. government basically came to the conclusion of, and And yeah, it is one of those things as well where I think crypto has kind of created this parallel financial universe. And rather than one of the problems with Tether is they're ultimately very dependent on the banking system, and CoinFLEX and flexUSD is really
totally
not dependent, exactly not dependent on the banking system. We interface with the banking system, but it's sort of as a very passive user, a minimal user of the banking system, and so we have this ability to create a parallel financial system that really exists. I mean, so far flexUSD has entirely been minted with USDC. So we're effectively kind of building our stablecoin off of the back of another stablecoin. And it's only in a month or in a few weeks that when we launch CoinFLEX US, that you'll be able to mint directly with fiat, US dollars in a bank. And that's really emblematic of the fact that what's being built here in crypto is starting to form layers upon layers of parallel economy.
It really is. It really, and because I think going back to what questions would the followers of Litquidity have, right? Traditionally, you think, okay, I have my checking account, and then I have other money that's in various forms of investments, right? You never really think of the two as the same because you always just want to, any excess cash, you want to move that out and be making money off of that. And think to be able to see this firsthand, okay, I'm making money off of just, technically this stable coin that I have. And then if I'm working in finance, I'm sitting there and I'm looking at that grow and I'm thinking about it and say, okay, this is something that, it's cash-like, right? So if I'm a company, if I'm a corporate treasury that, if I'm an M&A banker and I'm looking at like the cash and cash-like equivalents on the balance sheet, I'm thinking, why would I just settle for this, keeping it in cash and, having it be the same every quarter when I'm reporting versus putting some of this into CoinFLEX? Like, why not?
Yeah, it is really...
Is there an opportunity for companies and treasuries in the future for this?
Oh yeah, we're already starting those conversations and dialogues now. So I mean, I think there are so many use cases where it's like, why not? Why would you not do something?
At least
like
a little
this?
bit, right? Why not?
At least a little bit, or if this as this grows, as it becomes more mature, you're going to be very tempted, and I think most of them will just go mostly in or all in, for whatever they don't need to immediately spend out of. And that is really the goal. It's not to create some savings account product or yield product or something like that. It's really just to create a stable coin that does everything you need to do with as a money. You want money to earn interest. Your money should be earning interest. You want money to be instantly settlable on a blockchain with someone in some other part of the world. If I'm a U.S. company and I have to buy something from Australia, I don't want to wait 3 days before they start shipping it to me. I want them to ship it to me, right now. And so these are the types of things that I think flexUSD can solve. Is while you're sending funds instantly around the world, you're also earning interest on them. And I think really, the dollar value of the international settlements is like $5 trillion a day, and FX and all this stuff. And so really, there's so much money that is moving around in SWIFT and remittances and FX. It's moving around every day, and all of that money is earning almost no interest. And if you just think about what would the outcome be for the world if while this money was moving around the world, a lot of it's corporates, but a lot of it's small immigrants doing remittances.
Well, I would think Western Union would go out of business, so they probably wouldn't be happy with that one.
Sure, they might, but I think a lot. Also, the other thing would be that probably the biggest corporates in America would be earning tens or hundreds of billions of dollars more per year. I think a lot of these poor immigrants that are sending remittances back to their home country, they'd have a lot more money to send back. So I think from the the big institutions' perspective, it's a huge boon. From the poorest people in the world and the middle class, it's a huge boon. And I think this is kind of where money's going to go.
I love it, and it's fascinating. So what I'm thinking though is from everything that you've talked about, it seems like the big kind of catalyst for this is just adoption, right? But I wonder, is this something that say it's almost too much of a success, and you have too much money come in? Does that in any way affect what's going on?
Yeah, so I mean, there is a supply and demand component to it. Just like with anything, it's a two-sided marketplace, right? On the one hand, there's people that are buying futures and getting long crypto and getting borrowing and these types of things done, and then on the other hand, you have people minting and using flexUSD. And so there's obviously, if $1 billion of flexUSD was minted tomorrow, rates would temporarily go down. But the powerful thing about crypto is just the fact that there's very little leverage in the system right now. And we talked about this on a previous podcast, and I think the leverage and the capacity for institutions to be borrowing and levering up and taking on bigger positions and taking on more size and providing more liquidity in crypto, that's only going to grow. And so I think at least to the point of $10 billion, I think the market is totally unconstrained. Once you start getting into the tens and the hundreds of billions of dollars, you'll start to see a very dramatic shift in new increased participants that previously haven't touched crypto leverage, crypto liquidity providing at all. They just haven't done anything in the space, and they'll start to come in. And I think they'll start to come in because obviously the rates are lower, and so their borrow costs are lower. But also there's a consistency there where the rates won't blow out to 100% like we saw last year. And that was just a disaster scenario.
Yeah, and I think it's interesting too in terms of how you think of adoption, because I very much see potential here where if say we at Litquidity, if we start a venture fund, right, and so we're bringing in US dollars from people, but then we convert that, right, and so we're getting interest on that every 8 hours, but then if we're funding certain startups, then we're paying them in that as well, and you're starting to kind of slowly change the ecosystem, because why would I convert to dollars, lose money in conversion costs, and just have it sit there while we're waiting for it to be spent?
Yeah. And why would that startup hold dollars when they could be holding flexUSD up until literally the day they have to spend those dollars? So it's, CoinFLEX, practice what you preach, right? CoinFLEX holds all of its dollars in flexUSD, and we've gotten loads of excess capital freely to us because we do that. And so I think there are so many businesses, whether it's a venture-backed startup and a VC fund, both sides of which really should be, as you're saying, using flexUSD, or whether it's a large corporate, or whether it's an SME, somewhere in America. I think these are all use cases.
And it's interesting too, because for me, when I'm thinking about how does this actually take effect, and really all it takes is one large corporate to put a small. It's kind of like what we saw with Michael Saylor and Bitcoin right on the balance sheet. Yeah. But that's interesting because Bitcoin's so volatile. So you'll see all the memes and everything of, oh, well, look at what their treasury is doing today. And it's like, for this, I think that is one of the things that perhaps people won't understand initially, is that this isn't a volatile product. Yeah. It's not supposed to be considered one, but when people are doing things like having just a ton of Bitcoin on their balance sheet, I think people can conflate the two, which would be a little bit of an issue in the beginning, but it's something that's totally different. I think that's what's exciting here.
Yeah, I absolutely agree.
Nice. This has been really good so far, honestly. This is good stuff.
Bring home the narrative that is, everyone always asks, what's the utility of crypto? Because the narrative of Bitcoin has changed so much. And Bitcoin, as the first mover, has kind of given people the sense that Bitcoin is crypto. And if Bitcoin doesn't have any utility as money, but rather now holds a narrative that is store of value, then what in the world is crypto for if I can't use it to buy anything?
Yeah.
Because a lot of people say crypto is money, right? And that's contested.
Yeah. Yeah.
So now when we talk about stablecoins, that's where we're bringing back that narrative of utility. And we always say, the perfect person to hold a flexUSD is someone who is looking to participate in crypto, right? But doesn't want exposure to market volatility.
Yep.
But they want to participate in the upside. The upside being significantly higher yields than they would be getting otherwise.
Exactly.
With their cash in the
bank
bank.
And that's the same thing true for a corporate treasury as well.
Exactly. Just on an institutional level.
Exactly.
But this isn't a product that is for one specific group of people. I think that's also hard on the marketing front as well, because it's so applicable.
Let me hit that, because I think that's so. Leslie, for your job, your product, it seems like it can create somewhat of a challenge for you, because you essentially have multiple groups of people to cater towards. You have the individual, and then you have kind of your corporate treasuries as potential customers, right?
Yeah.
How do you manage this? And it's the story too, because when I think, back in the day when I was very crypto naive, I would just associate, Bitcoin, Ethereum. That's it, right? There's volatility, blah, blah, blah. But how do you kind of change the narrative? Because if I'm someone and I'm looking to get involved on the upside, right? Only the upside, but I don't want the volatility. How do you get that person and help them understand that it's not just crypto, like it's not just Bitcoin when you think of that?
I actually think it's setting the narrative. It's not even trying to change it.
A new age of media.
It's a new age of media. I mean, what we're really doing here is creating a whole new category, right? And if you've been in the world of marketing for a really long time, that's where you should be playing. Because in the world of finance, you could be building products left and right, but let's face it, it's all saturated because it all looks the same. There's very little differentiation typically between investment products. And that's why when you really want, that sort of competitive edge in your portfolio, oftentimes you are going to be paying a middleman who's doing that due diligence, who's monitoring the markets, and who's serving as your financial advisor to, be the eyes of the markets for you. Right? Because the opportunities just have compressed over time. And so what we're looking at crypto here, or what we're seeing in crypto here, is that there are so many new opportunities that no one really knows how to assess.
Exactly.
Right? So it's not so much changing the narrative as bringing in an entirely new one, but doing it in a way that is accessible and it's familiar to people.
One other aspect of this is I think that the stablecoin narrative is one that people don't necessarily understand because they see a lot of things going on in that ecosphere. So that word could mean a lot of things to a lot of different people. So when you think about setting the narrative, setting the tone, explaining all of this, how do you go about doing that? What are your thoughts behind this?
Yeah, so it's saying that flexUSD is pegged 1-to-1, right, for the US dollar. And when people just hear that, it's immediately understandable because you know what a US dollar is. And you know that by holding $1 today, despite inflation, it's still $1 in its physical form in 5 years' time. It's just the value, the purchasing power of that dollar can change depending on where interest rates are, right? So it's familiar to people who know of the US dollar being a stable currency, and that's not something that everyone can say. We're talking about it from the perspective of America, right? As
younger people as well, right? And so I think it's funny because we're having this conversation right now, but the whole idea of inflation is something that just we haven't been aware of until recently as people who didn't live through the 70s and 80s. Yeah.
And I think as well, most people also don't really think about money. They, as I said, they spend half their waking life.
Yeah, how to acquire it and how to spend it.
They don't think about what it is. They don't think about inflation. Most people don't really know about inflation. I think a lot of people just think that grocery stores raise prices.
They're just prices
just magically go up over time.
They're making more money. Well, there's actually a tweet by Elizabeth Warren about prices where she was basically saying that the grocery stores were raising prices so they could make more money. And it's like, no, it's because everything costs more.
Yeah.
When was this?
This was a few months ago, but it's funny because grocery stores have like a 2.5% margin. It's like one of the lowest margin businesses there is.
Terrible business. and the thing that's interesting, no one thinks about the price of money. They think money is the measuring stick. Well, what if the measuring stick is elongating and shortening and changing itself? And so I think that's why kind of money and the study of it and the technology behind it is that's always been super fascinating to me. That's how I started studying the nature of money, and that's how I got into Bitcoin.
Well, and it's so fascinating too, right? Because historically it's been the US dollar that everyone has either pegged to, or that's just been kind of the most common denominator. Like I remember being in South Sudan in 2013, and we were using US dollars because inflation was so crazy with the local currency, right? So, obviously in the 30s, we went away from the gold standard, but now you start to hear the debate, well, maybe the US dollar isn't going to be kind of the main force that everything is going to be pegged to in the future, right? And now when you start to see all of these other financial products come out, it's very interesting when you think about it in the context of the history of money, like you were saying.
Yeah, I mean, 3 out of the 4 places I've been, dollars have been king. You know, in Dubai, where we live now, the currency is pegged to the dollar. In Hong Kong, it's pegged to the dollar, and then obviously in London they have their own currency. But yeah, it is this interesting scenario. You know, I think part of the reason why the U.S. is so interested in fostering an environment of stable coins is because they know there's the risk of the Chinese central bank digital currency, which is called DECEP. And that could take off. That could become internationalized. That could become something that they promote outside of just mainland China. And so it is this scenario where, stable coins, I think, are actually a method for dollar proliferation. Right now, if you're in Europe, you're using euros in your daily life, and if you're in a country with a strong currency, Japan, Europe, the UK, whatever, you're using those local currencies, and you're not really interacting with dollars. You're not denominating your life in it. You're not really thinking about it. But if all of a sudden stable coins exist, that kind of changes that framework, because all of a sudden a guy in Germany might say, "Oh, I'm going to keep my wealth in dollars." And that he could do that anyway. You know, some people have a multi-currency account, but it's not that common to have a multi-currency account. And now all of a sudden, it's really easy to do. You
Exactly.
just have $3,000 in flexUSD or in USDC or something, and especially when that starts paying interest, and especially when some of these central banks in other places start going to negative rates, it starts making a really compelling case for citizens around the world, humans around the world, to say, maybe the local currency option that I'm dealing with, let's say you're in one of the South American countries that frequently has hyperinflation, maybe these currencies are not the best thing I should be using. Maybe I should be using dollars directly. My central bank is holding dollars, but the rates that they're giving me, the conversion rates they're giving me are terrible, or they keep changing every day or every month or every week. And so that's something I think we'll see happening too, and I think we are already seeing that happening as well.
I almost wonder, though, with them having so much Bitcoin, they're getting roasted a lot online whenever the price goes down, right? And so there's a benefit of being an early adopter sometimes, and then other times people don't see the vision, right? But if they were to have adopted, this, then hey, it's something that the money is only going up and it's not volatile.
You're not going to double your money in a year, but it's an escape. And it's a powerful one at that. And so I think that will really take off too. And I think whether it's here in the U.S. or anywhere in the world, the thing the U.S. is excited about with respect to stablecoins is their proliferation of the dollar in global markets internationally. The dollar is the world reserve currency, but that's still mostly a central bank concept or a corporate concept. It's not really a retail consumer concept. And the crazy thing about what's happening right now is it might be a consumer concept, and the implications for that are huge. I mean, what will that do to these different countries? Who knows? But I think it's very exciting for their citizens, for sure.
And one of the things you said is that this isn't going to make you rich right off the bat, right?
Yeah.
And I think that's something. So I always struggle to explain crypto to my parents because they always just think it's a scam. End of the day, right? They're used to a world where everything was cheaper, that you could put money in the bank, actually earn money in return. But you had your job, you worked hard for it, you invested, compound interest, blah blah blah, right? And I think for us, we live in a world where you can throw money into, Dogecoin and, 10 times it if it goes up at the right time. And people think a lot of this stuff is a scam. But I think being able to just see this compound over time, to see the real dollar return, that it's a stable return, that it's something that, it's not going to make you rich overnight, but it will make you rich over time. Yeah. There's something to that in that narrative that really helps people to understand that.
Well, and it promotes the savings mentality.
Exactly. Which is huge.
It's huge. And it is the, there's a lot of people who think about, the billionaires of the world and the big entrepreneurs and the big bankers and stuff like that. There's a simple way to make life-changing amounts of money, which is to save way more, save as much as you can to make more money than you spend, to save it, to put it into something, to grow it, and then in a lot of those types of environments, you can actually become fantastically rich. You can make millions of dollars over 10 years, 20 years, whatever, and you can even retire early. And so I'm not, I think there is an ability for people to kind of have this upward social mobility simply by having a savings mindset.
Which is something that really has been erased recently. That you look just at kind of the wealth transfer during COVID, right? Rich get richer, poor get poorer. And especially in America, we have this kind of debate oftentimes of, is the American dream still a reality? And a lot of that is everything costs more. You have higher prices. You can't go work, a typical blue collar job for 20 years, retire, and then pay for your kids' college, But for something like this, it's really kind of giving this opportunity back to people by saying, hey, look, the more you save, the more you're going to earn. And you don't have to go and do any of these risky products that are out there. This is something like...
You don't have to think about it much.
You don't have to think about it. And that's the beauty of it. It's like maybe I throw $200 in to start and I see it grow and grow. And then I slowly start to get more and more trust in it. And then it just goes off from there. But I think there's also so much kind of, we're talking about kind of this potentially gone middle class, but there's so many different communities in America that have been underbanked historically for many reasons, right? Depending on the group. And I think there's a lot of opportunity with this as well, because you're removing that need for the central financial system. And you're also giving opportunity in this that's very understandable and relatable.
Yeah, I completely agree.
I mean, that's what we're seeing the narrative of, passive income start to really, really dominate. I mean, go on YouTube and there are a bunch of people showing you, here's 7 ways to, make passive income.
Exactly.
And here's the side hustle. That is the easiest way, right? Yeah. Like everyone, I mean, let's be honest, like everyone's trying to figure out how to earn multiple streams of income now. Because going back to your point, it's not just going to work 9 to 5 and expecting you're going to be able to provide for your family, take out a, sizable mortgage, for your first home, put down some money for your first car. I mean, all these things in aggregate per month is a huge overhead.
Huge. And it's funny you saying, talking about kind of like the financial creators here do this side hustle, blah, 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 because there's so many scams out there now.
There's so many scams.
So many, whether it's, financial content creators, whether it's, both of our industries, right? They're full of scammers.
Crypto's
and so
full of scammers. Yeah. When you hear, and passive income as well, when you hear passive income, you should think scammers. Including if we tell it to you, do your own due diligence, get to know the people behind all these companies and figure out if you would trust them and have a beer with them and trust them with your car and trust them with your house and all that sort of thing. Or
look to see if you can see the audit online for where all the money is.
Yeah, I mean, at the end of the day, it's not that hard, but generally speaking, if someone is telling you, oh, you should buy this coin, if someone is telling you this passive income thing, the first thought should be, this is probably a scam. I should be open-minded about it as well. Maybe, do some due diligence. And you should figure it out. But there are so many people that have lost so much money in crypto by just getting scammed. And I think it's, as people that have been in the space for a long time, it's really incumbent. It's on us. It's our responsibility to warn these people. You, the viewer, everyone who's looking to get into the space, everyone who's in the space, should be telling people about this.
And I think that's something that's so interesting because, when you think about Bitcoin, Ethereum, any of that, there's really no person behind it. Yeah. For this, there is with you two. And so I think that's just something that really gauges a lot of trust. And like the way we're approaching this whole thing, like I've watched like a few Gary Vee videos in my life, but... He's great, and then you start seeing what the suggested ones are on the side, and you start going down the rabbit hole, and 10 minutes later you're like, what? People are watching these? People must be losing a lot of money, and I think it's something very interesting in the times, but it's great for us to be able to be here kind of talking about this, you guys opening up and letting people know a little bit about your story and really coming to understand this product because it's so different than anything else that's out there right now. And, I know aside from me and Lit in our podcast, that there's another individual that you guys have started to bring on as an ambassador in the United States, right? Do you want to talk a little bit about him?
Yeah, Doug Polk, he's a world-renowned poker player.
Nice.
And he is now solely focused on content creation. I don't know what he would call himself these days because he does hold a number of roles and is still very active in the poker community. But one of the things he prioritizes is actually speaking the truth and spending the time to learn about us. That whole engagement took a very, very long time. It wasn't, oh, great, here's another sponsor, here's another potential sponsor. Great, what's the money behind that?
Sign, and what was the thought process of going with him? How'd you guys get connected initially?
So there's a member on our team
Okay.
who has participated in the past in the World Series of Poker. So we have a lot of poker influences.
Which makes sense.
Yeah.
That makes sense.
Yeah.
Yeah.
And
Crypto
just
and poker
through
have a long
Yep.
track record together. Yep.
Yeah. And just through our, personal networks of different people on the team, was able to get in touch with Doug. And the interesting thing is he has never had a sponsor before
Interesting.
us. So
he's just raking it in all himself.
yeah.
Amazing.
No, but and that's for a reason, because he's never wanted to be a mouthpiece just for any old companies selling any old product or service. And, he's been interested in crypto for a fairly long time, but, spent a few years kind of dialing it back and focusing more on his niche, which is poker. But now with the right partner, finding that desire again to create content specifically for his audience, which he takes care of, to put the right type of information in front of these people. And I think that's what we're all here trying to do, right? I mean, you might have heard of, this whole thing about like education. And it is so important because oftentimes what gets missed is the stuff in the in-between, right? So we were talking about this. You see an ad here about crypto. The Super Bowl thing obviously was very big for people, and I don't know, there's like a extremely high rate of crypto app downloads or something, which I think is awesome for that kind of awareness, right, and for crypto adoption. But it's like, okay, between this ad and the next ad, what are each of our companies doing to educate people the right way so that they're learning in between these moments, and so the next time they see an ad, for example, it's not just, I guess there's only Bitcoin. They know about other opportunities, right? FlexUSD being one of them, obviously. But like that's really what we're trying to, do through this angle of media. It's like it's such a powerful force, and in positive and negative ways over time, obviously, right? But what we think is if we're partnering with the right types of people, that's where we can really use it to, our advantage to do great things. And we want to start doing that here in the US. We know there are enough opportunities for people, but it's never enough, I think.
It's never enough, but it's also really interesting when you think about kind of how the marketing game has played out with crypto. You kind of see it too with gambling, with sports betting coming legal in the United States, that those industries are spending so much money on marketing, just mass marketing. But in terms of education, there's nothing there. And so for you guys, I think, at least when I personally think about it, I can't speak for Lit, but, for me, this is the first podcast that, I put my name on out there publicly, and I'm not going to be putting it on with a company that I don't trust, that I don't believe in, that I think the product offering is just some scam. And so it's been interesting from that educational perspective to get to know you, but I really view for us on our podcast, a lot of the mission is to educate people, right? That's essentially, I think for Lit, he's someone who he knows a little bit more about the industry, having been involved in it longer than me. For me, I kind of view myself as the stereotypical, guy who used to be crypto naive, but is now getting into it. And I want the listener to follow along, our shareholders to follow along with my journey of understanding more. And I think it's something that's not hard to do, but for people, you hear about Bitcoin or Ethereum, you don't really associate it with people, right? Or companies or anything. Right. And I think it helps for you guys with this story that you're telling, because there are people behind this. You're real people.
I mean, just think about, the most famous stocks out there, blue chip stocks. Yep. Tesla, automatically, Elon Musk.
Boom. Yep.
Apple, Steve Jobs, right? What's another one? Name another one.
I mean, honestly, any stock out there for the most part that's well talked about on the internet, you're going to have one or two influential individuals behind it.
Well, and it's you guys talk about memes and everything, and I think that's basically the ground kind of breaking element of Litquidity. But Elon said it well. He who controls the memes controls the universe.
Exactly.
He wasn't joking. He's repeated this a number of times, and it's just plain as fact been the case with Tesla. Is by nature of the how prevalent he is, how great of a marketer he is,
just look at Dogecoin, what he's done with that, just from a few tweets. And I mean, that's the crazy thing about memes is that, like, I'll go on Bloomberg and talk about it and be like, they're a new medium of communication, and they communicate so many different messages with so many layers and levels that nothing can do. But, if you're a boomer, you're going to be like, that's not true. That's not the case. Yeah. But I mean, I'm sure people said that about the printing press when it was invented, and we're just in a different world now.
It is truly transformative, where you can communicate a few ideas in a simple image and some text around it, and a lot of them that can capture the zeitgeist of the times and can capture kind of what people are really care about. They're humorous. They catch on. They have this virality component to them, and so that's a big part of why we're partnering with you guys. But that's also kind of how we think about products, how we think about marketing, how we think about a lot of these things. Is look, when you're thinking about building a product, and I've thought about this a lot. Is like flexUSD is ultimately a product. It's actually the distillation of a lot of products built on top of it. So there's a futures exchange. And what can you do with futures? Well, one thing you can do with futures is earn funding rates in a riskless way, where you're really a dollar investor. And that's pretty cool. And we created this other product called Repo, and that kind of made it a one-click. You do this one trade, and you're earning that interest. But people don't want to trade. They don't want to go on a trading interface and figure out what these numbers and symbols and buy, sell, these types of things mean. They don't want to manage a position. They don't want to do any of that. So how do you distill that process from being a one-click buy button to being even simpler to understand? And how do you distill it until your product becomes a meme? It's like Google, where people went from using Google to eventually saying, "Oh, just Google it." And that's when Google became a meme. Yep. And that was both a sign of their success, but also furthered their success and their dominance even further. And so
it's almost like for you guys, it'll be like when parents start paying allowance in flexUSD rather than dollars, right? Yeah. And say, hey, don't spend all your allowance this week. Yeah. Like, wait to see what it is next week,
Yeah, you just flex me.
Exactly. Flex me. Flex me.
These are the.
I like it.
Yeah, these are the things that happen over time, and they take a long time to develop. But really, if what we're trying to create is the best form of dollars that exist, it is the sort of thing that needs to be memeable. It needs to be distilled into something that you don't have to think about, and you can very easily use it, and it's catchy, and it can be viral and stuff, and so.
Exactly. People will be getting it tattooed on their biceps before no time.
Absolutely. Yeah.
So we've been talking a lot about memes, and obviously Litquidity started out as a meme account, but you guys are going beyond that now, right? And that's why you've been brought on to really expand that brand. Talk about that.
Well, and it's funny you asked that, because so for me, I was working as a banker, and I saw this kind of opportunity December of 2020, right? So a little bit prior to Wall Street Bets. There was really no company that was appealing to Gen Z or millennials in terms of financial media. You have Fox Business, CNBC, Bloomberg, but they're all pretty boring. And then the rise of Wall Street Bets happened. Like, there's something here. There's something to this. And I basically saw that opportunity, took that, was introduced to Lit after a bunch of things, including going on a reality television show happened, and saw with Litquidity, there's this massive and very, very engaged audience. I mean, when you talk about engagement rates, like, there's this kind of like app that we have to measure our engagement rates, and it'll be like, okay, above this threshold, like that is top like 0.001% of a celebrity, and we're above that level, and it's wild. And so it's like, there's something here, right? And what is it? And it's like, okay, these 80% male, 20% female people from 18 to 34 mostly based in the United States, probably 65% or so. The rest, London, Hong Kong, all the main areas you'd think of, who are involved or ancillary involved in the financial industry. They want a different voice. And so we're that voice for them. So in seeing that, I partnered with Lit because we both have the same vision. And so I come on to kind of grow this out as a new age media company of the future. So we start with a podcast, because I think for both of us, for him being anonymous, this is a good way to be able to get him out there to people, yet, also concealing his image and who he actually is until that time comes when he wants to let that and make that public reveal. But so that's one area of it. We continue to have the content, but for me, I view this is an ecosystem. You get a kid in at 18 who they're thinking about going into finance, or they want to learn more about the industry, right? and they follow the page, and then they are subscribing to ExecSum, the newsletter that has about 110,000 subscribers right now, that was started in January of 2020, which is a great increase in terms of the subscribers there. So you're getting educated through that. If you're an athlete, you're part of our student athlete program, and then you're going to go into your internship somewhere that hopefully you're going to be learning from us as we get more into education to prepare you for. You're going to go into the workforce. We're going to be educating you while you're in the workforce. And then if you're doing the traditional kind of 2-year of investment banking analyst to private equity transition, we want to then place you in that next job and just continue to grow with you. Because for us, yes, it started as a meme page, but there's so much potential here in the future that, I mean, you know, kind of linear TV is something that I think is going to die after the next election. And so for us, I see there being a very big opportunity in the streaming space, whether we partner with another established player or create our own stuff. I think this time next year, we'll definitely be having a show on, you know, one, if not multiple mediums, and taking it from there to really be able to be a voice. Because I think for us, both, you know, for myself and Lit, you know, we have very serious backgrounds and have accomplished things that I think, you know, you wouldn't associate with the meme page. And so we view it as there's kind of this dichotomy of who we are, where there's a very serious, you know, an educational background and being bankers. Then there's just this super immature side. Mm-hmm. And we kind of meld the two, because at some points, you know, you want aspects from both, but we're creating this kind of average of both. And I think that's something that it gives this unique voice and appeals to so many people that will continue to grow, continue to have that authentic voice. And I think, you know, for both of our companies, it's something that you don't necessarily know exactly, you know, kind of what the future holds with it, but you are always there to iterate and to kind of get, you know, what the boots on the ground response is, go from there and just continue to build and build. So it's super exciting.
I think it's cool because in the case of both your business and ours, it's about building a primitive. That's you know, you start with the kind of the base layer, right? For us, that was futures. For you guys, that's eyeballs on a Twitter account and an Instagram account, and people attracted to these types of memes and this type of community, and so you start with this kind of first layer of something that's great, and then you build on top of that, and the cool thing about it is really. Once you've got a community that's interested, once you've got a community that loves you, that's, you know, excited about you and is kind of virally sharing things about you, you know, you can just take that in any direction.
Exactly.
So,
yeah. Once you have the following, you can do anything from there, is what I realized with this, that especially for a traditional media business, like, you know, they have to build the following. Yeah. And for us to do that, and it's like, you know, you look at a lot of these companies out there, they're struggling. CNBC, very much struggling. You know, traditional media, it's something that you really wonder how kind of ready these companies are for the next wave of media. And I think for both of what we're doing, you can't think about how things have been done, right? Like, I wasn't trained in a journalist. You didn't go to Bitcoin University to learn, right? Like, there's no way to do that. You have to think about, okay, where are we going to be 5 years from now, 10 years from now, and work back. And that's what I love that we're able to work on here. And so even, you know, like Leslie was saying, for us and thinking about how to market this, like, there's so many different ways to do it rather than just traditional, okay, I'm going to go pay a celebrity a lot of money to put flexUSD on something, or I'm going to go, you know, get something named after flexUSD, CoinFLEX US, whatever, and to do it in an organic way that really builds trust and helps people to know and to understand you guys like we're doing today. Yeah. And so, Mark, Leslie, we have learned so much today. I think this has been a great introduction to the American people, starting with your visit with Mayor Suarez yesterday, for everyone to really start to get to know you. And I think that this is going to be a journey that we're all going to be taking together, whether it's through the Big Swing Index podcast, through the content that you guys are going to be creating. And I think it's going to be awesome for people to really see two faces behind this and to watch everything grow, and for awareness to be raised, and for this education to occur for everyone in America.
Awesome. Yeah, we're super excited. So it's going to be a great journey, and, you know, it's just the continuation of a journey. And so, yeah, it's really exciting to be here in Miami.
Amazing. All right.
Litquidity and CoinFLEX. Here we go.
Fantastic.
This has been Big Swinging Decks by Litquidity with your hosts, Lit and Mark Moran. This is a Red Rock Music podcast. Our executive producer is Red Yoakum. Our associate producer is Emma Martins. For more, follow us on Instagram @Litquidity and @It's Mark Moran. or visit the official website liquidity.co. So tune in weekly to your Managing Director Secretary's favorite podcast, available wherever you listen to podcasts.